Hi, this is Randy Finney with Right Side of the Chart, and this is the late session update for Monday, October 19th, 2020. As we head into the final hour of trading, I want to do a quick update. What we'll do is look at the broad markets briefly. Really, QQQ continues to be my primary focus. We'll take a look at that. And then some of the recent trade ideas that have been highlighted, such as natural gas, coffee, some individual stocks, particularly the FANG stocks, Facebook, and Alphabet, which is GOG, Google parent company, and a couple others. Let's dive into the charts, make it as quick as possible. So this is a daily chart of QQQ. I've been focusing a lot on the 60-minute time frame recently, but here's that uptrend line, or comparable, similar to the one I have on the 60-minute chart, and you can see it's pretty well defined. On the 60-minute chart, I have a couple of pierces through there on those 60-minute candles, but on this daily chart, it's a pretty well-defined trend line. You can see numerous candles, reactions on that trend line, and now a clear breakdown today. And this is the first support level here, about 283. We'll call it 283. You can see a bunch of candles there, and then you can see some of the other potential targets. So, I continue to think it's the most likely scenarios. We're going to see some profit taking. It's been a strong run up since the March lows. We're not too far off the highs, and I don't need to tell you guys how much discourse there is in the political arena, how polarized the parties are. Again, based on both the technicals, overbought conditions, everything I've talked about, even going back for a month or more when I have highlighted the extreme low sentiment, or extremely bullish sentiment reading with the low put to call ratios and things like that, leads me to believe that the risk reward ratio right now in the coming weeks leading up to the election on November 3rd is skewed to the downside. So, and then technically, I can have my opinion, you have yours, but technically, that's why I want to do the update. That's a solid and impulsive breakdown. You can see the PPO is poised to make a bearish crossover. It's above the zero line, so that's what you want to look for. Here's your zero line down there, the dash line, and I'm going to circle the PPO crossovers. That was the last one we had right there. Time before that, it looks like the lines were flat there. There's a pretty clear crossover. Those are often used as trend change indicators, so we haven't crossed yet. But when you take a look at the slope of the line, you can see it's coming down pretty hard. And so it would take a nice pop up to prevent that crossover from happening. So that's what we're looking at on the daily chart. When you get the crossovers there, or any signals, any trend change indicators or breakdowns like a trend line, remember that on the daily chart, it's going to project for a larger move, whether it's a bullish breakout or a bearish breakout. It will tend to project for a larger move, both in time and percentages, than it would on an intraday time frame, such as a 60-minute chart. Now, speaking of that, let's just jump over the 60-minute charts. Here's the one I posted this morning, and I had alternative trend lines, but they both came in together, intersected, so it doesn't matter which one I want to use. We had a clear breakdown today. Remember, we had virtually or almost effectively backfilled the gap there once. The fact that it was backfilled once and then we rallied off the backfill, the fact that happened made today, and that's why I said this morning, the odds were pretty darn good that we were going to at least backfill it once more once we entered it, because once you backfill a gap in a bullish trend, you don't look back. That's it. Market doesn't want to leave any unfinished business. But you can see we didn't go very far, and then we fell back into the gap. And then once they took it out today, it's not mere coincidence, you had the biggest red candle. That's impulsive selling once the bottom of the gap went. That's what traders are looking for. They're trading off these big gaps. And so now we're coming up on that first target, and I think the arrows I had showed us going down to about 280.32. That would be the minimum right there. Well, it is next support, but I think the 280.32 level is also actually quite a bit more. I mean, that's just really a near-term pullback target. I think we can see some more based on this pattern, based on the breakdown there. PPO is crossing down below the zero line. If it crosses that negative 0.5 line right there, that purple line, that's all the better. Sometimes that acts as the defining trend line right there. And I'm referring to this PPO signal line, the white line. When it crosses down below, boom, sell signal, bearish trend. And again, sometimes it's the white line, the zero line, or sometimes we've seen where this line here acts as support and resistance and can signal trend changes. And so that's something to watch for here. And if we get a lot more downside, then we'll get that. All right, so that's the cues. Again, I've covered earlier today. NQ, NASDAQ 100, we're coming up just like QQQ, not too far from the top of the recent trading ranges. I can draw a box here and here as well. So we'll call this a support zone, just like QQQ. We're coming up to the top of it because we had a couple reaction highs there and there. So that is support. If you think the market's going to new highs and you're looking to buy dips, you could step in here. But at this point in time, again, based on a lot going on, and I'm focused on the near term, but I have to say I think we're going to come down to at least the bottom of that range. We're getting very oversold, so you do have to respect that. This green line, that's your buy line, and I pointed that out the other day right here too. Remember, and this is what it gave us, a tradable bounce. That was what is that? I'd have to take a tool like that, put it there. Yeah, that's about it, and that is what, 2.5%. So certainly a tradable bounce if you're an NQ trader. But here's the thing: we hit it, and we're already back down there again, and that's more indicative of downtrend action. In a bull trend, usually you hit it, one and done, and you have a nice big rally from there. But when you're in a downtrend like you are here, you hit it again, you hit it again, hit it again. Finally, the downtrend was over there. But those persistent or close, oversold readings are again more common in a downtrend than in an uptrend. Uptrend, hit it and you're done. There's your next big tradable trend. In an uptrend, you tend to hit the overbought reading, which is that red line, more often. So bottom line, this is support. Probably it for the end of the day, my guess. Again, just for the very micro near term, if you get this video before then, we're there at support. And QQQ again at support, minor support, but it's not a bounce that I would try to game. I think whether we bounce a little bit today and head down, I think we come on down here at minimum in the very near term. And that's either later today by the close or tomorrow. And then the other ones I wanted to show you, I did an update on Apple and Tesla today, because those are the two. Those stocks have been on my radar ever since before and after their big, very well telegraphed stock splits, which I'm still viewing as potential buying climaxes. Covered Apple earlier, and again, this is the range in orange here. That was the day of the split, 4-for-1 split. There's everybody that bought into the split afterwards, and then as you can see, we fell back below and they went underwater and have remained underwater. Not a single person that bought the day of or the rally after the split has even broke even yet. We came very close, but we didn't even get to the bottom of the range. So now it's been from this point, since the day of the split, what are we talking here? 1.6 months, and everyone was underwater. It looked good for a little bit there. They were getting close to break even, at least those that bought in the bottom, but then boom, another rejection. And it wasn't just a rejection off that range, it was a rejection off this longer term trend line. This trend line goes all the way back to the March lows right there. And so at this point right here, that's what I was referring to in today's post. We had a perfect back test of the trend line and a rejection off that trend line, as well as the bottom of that trading range. Apple is expected, has backfilled the gap now. That was the gap from Monday before last, and if that gives way, again, we're at support level, right? We're at support right now in Apple. I just showed you support on NQ and QQQ, so odds favor at least a little bounce, a little minor reaction, buyer stepping in here. But if this level goes, let me keep it simple. Support until unless broken. So if we take out today's lows by much, especially with conviction, whether we bounce first or not, then that's going to open the door to the next leg of selling, which would be a move down in Apple, I believe, to that 112.33-ish level. And then Tesla, same story, or similar story again. We have a longer term trend line all the way off the March lows as well. That was taken out recently with a minor trend line as well. That's just slightly, we're trading slightly below, but same story. Here's everybody that bought this day of and after the rally after the split. A couple times it looked like they were going to get back to break even, and some people did that bought at low end of the range, but yet every time we get up there, the sellers step in and take profits, and so far that's been the trend. And you can see that's really right about where we were back here on that initial test to the bottom of the range, and we remain above it. So I'm treating this as a buying climax / bull trap until and unless that's taken out, and if it is, then that's nothing but bullish. Everybody that held and rode that out, or everyone that's buying it at that time, they're profitable, anytime a stock makes a new high. But if we do this, again, you're going to have technical damage here as well as what I like to call psychological damage. Again, for those that thought a 5-to-1 stock split on Tesla and a 4-to-1 split on Apple could be construed as nothing but bullish, with the stock guaranteed to go on from there. I know that's how the retail crowd thinks. I know that because for 13 or 14 years I worked as a stockbroker and would get the calls, and usually they are. Look, usually if a company splits, it's only because the company's doing well, their stock price is high, hence the split, so they're in growth mode. But again, as I covered in a video a couple months back looking at Apple, there are times where that split marks the end of a bull run with a correction to come. And the other index, other than QQQ, I've been watching is IWM, and we've now cracked the uptrend line that comes off the mid to late September lows right there. There's your uptrend line and a fairly impulsive breakdown today. And this is a big level here because that was our breakout level right there. And so a lot like QQQ, right now, you want to just be a purist on this, say, well, we broke out. Just like QQQ broke above that multi-week trading range I was highlighting, and we're coming back to back test the top of the range. So this would be your bullish case. We come back and we make a successful back test. It's pretty much this box from about we'll call it 160 down to about 159. That's your bullish scenario. And should we fail that, come back into that well below that the recent breakout by a good amount, that's quite bearish. Same thing again on QQQ with box it in here, or just give you a box tool. Covered this so much recently, but that's it. So there's our our multi-week trading range there, and we're coming to back test the top. So that's it. Bull scenario, bear scenario, and if we get back in the trading range, a good chance we're coming back down to the bottom of it again, at least the bottom. Okay, and some of the recently highlighted trade ideas / analysis really on the market were two stocks here. Alphabet, and I'm talking about those potential head and shoulders patterns, topping patterns I pointed out in the 60-minute time frames recently. This is Alphabet, GOG, and you have a nice, so far, potential only, head and shoulders topping pattern. It is unconfirmed. It's not fully formed. We need to put in a right shoulder. If we put a right shoulder in, that means you have to drop from here to keep that symmetry somewhat intact. It really needs to. As I said the other day, I think I pointed out when we were there, I said that's about it. I want to see it start to turn down. I don't want to see it go up much more. Why? Well, you don't have to have perfect symmetry on these patterns, but you don't want to see it wouldn't be a pattern. If you went up there and put a right shoulder like that, it's above the head, that's no longer a head and shoulders pattern. So that is, again, left shoulder, head, right shoulder, and we're moving down, and so far fairly impulsive, and that's what you want to see. That's one of the criteria. A lot of traders, you might not scrub these patterns, but if you read up on this pattern, stockcharts.com, by the way, their chart school has great descriptions, brief and pretty thorough descriptions of all these patterns, and they'll tell you want to see increased volume on the move down off the head, the move down to the neckline, and off on the right shoulder as well. So if we continue to get that, then we'll have a fully formed pattern, and then your sell signal will come on a break of the neckline, and I give you a measured target. Again, guesstimating at the time when we get there, and that would be about down to 1140 right there. As I said back then last week, and I'll say it again, this is an objective, that was, and this still is an objective time for an aggressive trade, probably a partial position. Remember, elections are coming up. About the only thing guaranteed is increase in volatility. But you could put stops above there, because if we go up much higher, it's going to foil the pattern. And then maybe add, if we get a move down to the neckline, it may not be a straight shot, but we get a move down there, you could add or take it up to full position on a solid break below the neckline. Also keep in mind that Alphabet has a gap right here. That's that same gap from Monday before last. We're at the top of the gap now, which is support. So pretty much everything I've covered so far related to QQQ, whether it's the futures or the top components, even IWM, all fall into support. But if it enters the gap, then a gap backfill is likely. And if it takes out that gap, that's going to be pretty darn bearish, and you'll probably see the sellers step in and start to get that impulsive selling. or additional. It's been pretty impulsive so far, but a lot of work to be done. Facebook also, I pointed out a potential inverse head and shoulders pattern. There it is, Facebook, and that's it. So you can see left shoulder, head, right shoulder. We didn't come all the way to the neckline on the left shoulder, but has that basic, the gist of the pattern. Sometimes these patterns, again, don't have to be perfect, and what you do want to see is additional impulsive selling there. You can see the neckline. You can see Facebook's already broken down below that gap from Monday before last, so we're getting some technical damage here today, no doubt. That's why I wanted to do the video. And then just to follow up on other trade ideas, Nat Gas continues to shine, and it broke out today. So the only change to this chart, I believe, since last week, the last update, would have been I added a trend line right here that formed a symmetrical triangle. This was the downtrend line that I've been highlighting recently. We broke out first above this bullish falling wedge. Just to kind of recap, hit my first target of 207.08, pulled back, tested it again, finally broke above it right there, buy signal, ran up, and validated what was, at the time I set a potential trend line because I only had a few reactions, but I did have the trend line there, and the 2915 target. Both were hit, giving you an objective time to book profits, because that's a high probability of a reaction when you have both price resistance 2915 as well as downtrend line. The downtrend was validated there. It was again validated on the next tag, and it was again validated right there. So lots of reactions, and now boom, breakout today, which is bullish. And you still have that 2915 target, but as I often say, it's the initial tag of each of my targets or price resistance levels where I expect a reaction. Once it's been hit, if you get it again and the charts are constructive, that increases the odds that you'll take it out. Now, with that being said, resistance is resistance until it's taken out. So do you go long right here just to try a 2915? No. You could have bought the breakout. That would have been an objective long entry. At this point, you want to wait for that level to go, especially the previous highs. We went a little overshoot above that level before, and then that opens the door to the next targets on that chart, which are 146, and I may have added these two upper lines. I did add, yeah, that might have been since the last video, other potential upside targets there if natural gas can break this area. So look at it this way. This has been a consolidating range. It's been in a downtrend, and then it's been consolidating sideways in this range, building a lot of energy. So if we can get a breakout, that would be bullish. Otherwise, if they reject at the top of the range again, then you want to watch this downtrend line to come into play as support right there. And there's a quick glance at the UNG 60-minute chart with targets and levels. But again, I prefer, even if I were to be trading UNG, if I couldn't trade the futures, which are my preference, I'd be watching the charts. You can get free real-time futures at investing.com, natural gas included, charts, quotes, everything. And because you're seeing the round-the-clock trades in natural gas, and that's what this ETF is trying to track, is natural gas prices via futures. So if the NG chart plays out, then this one should as well. Coffee, KC, I'd highlighted it as a bullish setup recently, but if I'm not mistaken, if I recall correctly, last week I said, look, I'm not crazy about the action so far. Watch it. If it takes out the low, it may put in a marginal new low, would still have divergence, but I believe I said, at this point, you want to see some bullish price action before adding. So as I think I said last week, if I didn't have a position already, I wouldn't be buying it right now. Just not very convinced with what's happened since that breakout right here. It's kind of been floundering around. Maybe it slightly undercuts that low. Anything much more than a marginal new low, a slight undercut to keep the divergence intact, is not going to be good for coffee. And if it can do that, if it can rally from here or put in a marginal new low, when you get this close, I have to say, usually you do, not always, but quite often when you get that close to a support level, they take it down. They being the market makers, nefarious forces, algos, that try to clear the stops, because that's what it would do. If stops are placed really tight under that recent low, they run the stops. That hits a bunch of sell orders, causes a sharp drop in coffee prices. They turn around and then gun it and buy it down here and maybe move it up. So we'll see if that happens with coffee. Like I said, Cautiously bullish right now at this point, and no reason to add it at this point in time. But if it gives us a, if it can rally here or just make that slight marginal new low and then start to rally, then it might be worth adding to or taking a new position. Other trade ideas that were highlighted recently, not many, but I'll just hit a few. I highlighted a couple longs last week. QTT, that was on a back test here, and it did bounce off the trend line today so far. Nothing huge. At one point we were up, I don't know, what is that, 10% or so off the back test today. Again, there's positive divergence, everything I wanted to point it out. So it's certainly, I'm trying to find the long trade ideas. Nothing screams right now as a screaming buy, but that's a decent constructive chart. Same with this XXII I pointed out, 22nd century group. Took out the downtrend line here recently. That was a breakout, which is bullish. Did it on volume, tried to circle that. There was your breakout, and it came in and back tested this minor uptrend line. So if you are along this one, your stop should be not too far below, because if it moves much below that, it's going to take out this minor uptrend line, and then it's going to fall back below the downtrend line that it just broke out of, giving you a failed breakout. So you need stops somewhat below there. And again, low price stock, as I said, do your own due diligence. LKCO, I think I brought up last week, breakout above there. And moving higher since, up 10% now, was up higher today. You can see already given back half the gains or so, so it was probably up about 20% at one point. Not crazy about the volume, and again, I said last week, these are long setup. The charts are constructive, so if you think there's more upside, or some of these stocks too, think about it this way: they fly under the radar. I don't believe this is an S&P 500 component. I don't even know if it's in the smaller mid caps. I haven't checked that, but a lot of these, no, not at that price. This is a penny stock. So again, let me move on. Let me go to some of the shorts that I highlighted recently, starting with DraftKings. DraftKings, I think it's time to book profit. If you caught this one, I highlighted it here as a sell signal to come on a break below this downtrend line. That happened there. We have plenty of opportunity to exit or to get into it, because we broke down and gradually started moving lower, but it was an impulsive, certainly a confirming sell signal with that big red candle. So from the breakdown point to today's lows, that was about a 31% drop. We hit that 43.75 target here on the daily chart, and for the time being, I think, again, I'm saying it straightforward, I think it's a good time to book profits, at the very least tighten stops. It's a pretty good support level. Reactions back here, couple reactions there before the big green breakout candle right here. And so if you can't hold that level, I have an alternative or a minor uptrend line right here, and then price support or the next potential target at 38.23. One of the reasons you might want to cover, here's that 60-minute chart. I also gave you targets on the 60-minute time frame, and what you can see, I pointed out last week we had potential positive divergence building here. That would be your divergence line. And there's also, you could probably, maybe I'll put it a little bit better. Let me try this. Something along these lines, a downtrend line. So that's giving you the a bullish falling wedge pattern on the 60-minute chart. We undershot briefly that $44 target. That was my final target on this time frame, 60-minute time frame. We hit it, and we're back to it. We had a momentum fueled overshoot down below it, but we're at 44.09, meaning we recovered, or effectively that's the reaction on this level. I talk about what I call momentum fueled overshoots. When you have a lot of downward velocity, you tend to overshoot a support level that was going to and ultimately does prove to provide act as support. And so for that reason, and the bullish divergences, just like the bearish divergences here, negative divergences, and the bearish rising wedge were the catalyst for the drop down. And there was your sell signal, and that was the drop since. So, volatile market, elections coming up, volatility cuts both ways, up and down. Why not just take the 31% or whatever you got out of it and run at this point, and then maybe look for another reentry elsewhere. SPLK, Splunk Inc. is another one I mentioned in one of the recent videos. It's a short trade idea. Following this divergent high, we had a big drop down to that 171 support level. Bounce from there, had a nice run up, and in doing so, we set up this nice clean minor uptrend line. Since that it was highlighted, we broke down. There's your breakdown candle, and we're trading below there. And you also have, you know, if you zoom in real tight, there was a gap down there that on the breakdown. Why can't I? These tools. Sometimes you click on a box tool and it doesn't change off the arrow tool. Here it is. There's the box tool. That's a gap. So you're back testing the bottom of the gap and you're still below the trend line. And that remains the next target. The same targets as last time. 190.25, call it, and then about 171. And that's it. We'll wrap it up here. There's QQQ. When we started the video, we were at my you know, at my 282.71 target, close enough there, and there's the reaction so far, a little bounce. You know, again, it wasn't just QQQ. We also had, as I showed you, just about every other component, big components in the NASDAQ 100 as well as IWM hitting that level. So minor bounce, but again, how far it goes? Well, let's look at that. Well, the top of the gap right there. There's again the big gap from Monday before last right here. I'm going to bring this box out a little more. So about 285.80. That would be a back test of the gap. So there's a potential bounce target, and maybe take us down there like that. And it is, by the way, the fact that the gap was already tested. Again, you don't see it here in pre-market. I showed you it was tested that morning, and then it was backfilled, and we broke below it today. So this is a more of a near to even intermediate term bearish technical event. The fact that the gap was successfully tested, backfilled there, but then boom, we broke below it today, and that is what's putting me on you know, the more downside scenario, whether we get a little minor bounce here first or not. Okay, we'll wrap it up. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.